The purpose of this video is to help you understand the difference between different chart types. Right now we're looking at a 1 hour time frame, so every single bar or candlestick that you see equals 1 hour total of price movement. So we could count them and say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and see that 12 hours ago we did experience some larger downwards movement. Now, we do have different time frames we could consider, like the 15-minute, the daily, and also you can trade as small as even 30 seconds. Some platforms offer you 60-second time frames. Now, moving beyond a time-focused chart, because I'm sure this is what the majority of individuals who are watching this right now are using, we have what is called Renko and range charts. We're currently looking at a range chart, and within this, 1 bar is equal to 50 pips of total movement. Now, the key with this chart is that it allows us to see price in a less volatile way. These settings that I've customized, it allows, like I said, 1 bar to be 50 pips of movement. Now, with this, we're going to see wicks, because the 50 pips can occur in any direction. So we can really see which pairs are trading volatile right now. We can see right from the May 30th candle right here, we've had 1, 2, 3, 4, 5, and we're currently printing the 6th candle. Now, if we come onto something like the GBP NZD, let's just see if we have the same level of volatility on the 30th, which is right here, this bullish one. We've had 1, 2, 3, 4, 5, 6, 7, 8, and we're printing our 9th. So you can really gauge how much interest is occurring at a market at any given time with the range chart. And we can take it one step further. If we just come into here, switch our style to Renko bars, now we can see the trend much more clearly. And the reason why I say this is because although the setting remains the same, and each individual bar that you see on the screen is equal to 50 pips of movement, for that bar to close, it must be in the same direction. So in order for this 1, 2, 3, 4, 5, 6, 7, 8, 400 pips worth of downwards movement right to an area of demand that we have already on our chart, we could see that movement clearly. And now we're looking to print our first bullish candlestick off of that 400 pip downtrend. We could be getting a correction. We could be getting a continuation up to our 61.8 Fibonacci retracement. And mind you, this is 1,100 pips away approximately from where price is right now. This could be the potential for a very great trade. If we were to enter an order, which I'm not recommending because trading does involve risk, and you should be holding yourself accountable for the positions that you're taking, and really by pressing play you did agree to this. Now, moving forward with the analysis that we have and with the information, if we were to enter a buy market execution right here with a stop loss below our demand zone, we'd be looking at about a 200 and let's say a 300 pip stop loss, just to keep things simple. Now, if we were to enter a buy right now, 300 pip stop, about 900 pip potential for our target. So it's a 1 to 3 risk to reward trade that we have identified already. Now, it doesn't mean that it's going to be right or wrong per se, because myself personally, I wouldn't be entering the market on this very moment specifically. I would take this information that I'm gathering with our Renko and range comparisons, And I would go and look on the daily. I would consider the trend, and really I would get a better idea for where it is where I could place potential buy limits. I'm thinking even at the lows of these wicks, the 1.80200 level, let's say, is where we're going to place a buy limit right now. And our stop loss is going to be at the 1.798. So we're talking a 40 pip stop loss with the potential reward. If we want to make our first target at the 38.2, we're talking 80 pips. If we want to come up to our 200 exponential moving average, we're talking 180 pips. It's also a psychologically powerful level at 1.82. And then of course we have beyond that with the continuation of the trade, as we've already discussed. So really, when it comes down to it, I appreciate you. I wanted to make this update video for you so you can see there are different types of charts available to traders beyond just the simplistic time-based mentality. We also have tick charts. This is measuring the transactions coming in and out of the market. So again, it's very interesting to just compare what this looks like on different charts with different styles. And the euro US dollar is giving us some weird information right now with the tick, so we're going to switch that. There we go. It's a lot more clear now. And really with that, I want to just remind you to join forexcommunity.online. We are running giveaways all the time. We really value our members, and we really aspire to help you take your analysis from where you are right now to a higher level of confidence, a more consistent method of feeling the freedom that trading as a business can offer you, and there's much appreciation. I'm Zachary Hogan at Start Trading, sending those peaceful, loving vibrations infinitely.